Hello and good morning. Holly Shields here live from Kalkine Studios in Sydney, and you're watching the early trades. Let's get started with our market open report. The S&P ASX 200 climbed 0.6% in the early trade hours, with healthcare, tech and consumer discretionary as the best performing sectors. The top laggard is utilities, down 0.1%, and as for shares, Magellan fell 2.5% at the open to $30.55 following news that its CEO, Bret Cairns, is set to part ways with the company. Then the Bank of Queensland is up 3.2% despite warning its operating profit margin is set to come under pressure, while shares in the biotech firm Neuren rocketed 48% to 2.51 after it announced positive trial results for the phase 3 trial drug Trofinetide for the treatment of Rett syndrome. Then as for the biggest gainers, PointsBet is up 5.6%, Tyro Payments 4.9%, Bapcor 4.5%, Corporate Travel 4.5% as well, and Qantas 4.4%. On the decliner side, AGL Energy is down 2.4%, Aluka Resources 1.8%, ASX Limited down 1.7%, Linus down 1.4%, and Rio Tinto is down as well 1.1%. Commodities rallied overnight after China gave its sluggish economy a prod. The People's Bank of China reduced the amount of money that lenders have to hold in reserve, which helped lift US materials 1.48%. The best of the sector gains in the US were a mix of cyclicals and defensive. Industrials put on 1.64%, consumer staples 1.6%, and utilities 1.35%. Meanwhile, the energy sector rose 1.53% as crude oil jumped. 11 US sectors advanced. Health and tech were the weakest of the gains, with less than 1% each, as financials put on 1.41%. Risk appetite at the speculative end of the market has deteriorated sharply in the last few weeks. The S&P ASX 200 Emerging Companies Index fell 3.4% yesterday to join Wall Street's Russell 2000 Index of small caps in a technical correction. The decline followed a 22% dive in the value of Bitcoin over the weekend. The digital currency plunged from around $54,000 to $42,000 US before regaining some of its losses. Coins were this morning trading at just over $50,000 US as well. Meanwhile, in China, Evergrande has also re-emerged as a cause for concern. Shares in the country's second largest developer hit an all-time low yesterday after they warned there was no guarantee that they can meet debt repayments this week. Evergrande has survived several near-death experiences in recent months but may finally face default. Then in other news, the Reserve Bank meets today and will release a revised monetary policy statement at 2:30 p.m. Australian Eastern Daylight Savings Time. While no changes to policy settings are expected, the central bank may use the opportunity to refine its outlook. The Federal Reserve last week dropped any reference to inflationary pressures being transitory. Wall Street interpreted the change of language as a sign that US interest rates are likely to rise next year. Since the RBA had previously cleaved closely to Fed's stance on inflation, it may now be adjusting. And also in the news today, the AIG Services Index released at 8:30 a.m., ABS House Price Index released at 11:30 a.m., and monthly Chinese trade figures are also due. The Bank of Queensland is also set to hold its annual general meeting. And on to today's IPOs, Rocket Boots listed at 11 a.m. and the company offers software for reducing business losses in retail, banking and workplace sectors. Meanwhile, American West Metals also lists at 12:30 p.m. The miner aims to develop a zinc copper indium deposit in Utah. Now before we look at more trending updates, let's take a short break.
Hi, am Sage, and get ready to take the crypto ride with me on Kalkine TV. Watch the Crypto Buzz every Tuesday and join the excitement at Kalkine TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching Kalkine TV.
Welcome back. Let's take a look now at the ASX listed companies that are in the news today because of their price sensitive announcements. First up, the Bank of Queensland says its net interest margin will be slightly lower than expected as it feels the impact of industry-wide trends, but still expects revenue to grow faster than costs. Chief Executive George Frazis planned to provide an update on the regional bank's performance at its annual general meeting today, after a big year for the lender in which it bought ME Bank for $1.3 billion. In his speech, Mr. Frazis said BOQ will be the latest bank to feel pressure on its net interest margin, which compares funding costs to what banks charge for loans. And then ASX-listed investment manager Magellan Chief Executive Bret Cairns has resigned suddenly for personal reasons and will be replaced by Chief Financial Officer Kristen Morton as interim. Magellan's board was informed of Dr. Cairns' sudden departure and did not provide details on the resignation in an ASX statement after trading close today. And proxy votes released this morning by Oil Search showed a 95.4% support for the merger. The votes cast ahead of a scheme meeting represented 69.6% of issued capital, already giving the scheme 66% support for the required 75%. Oil Search Chairman Richard Lee is to tell the meeting that while the independent expert report by Grant Samuel concluded that Oil Search was contributing more value to the merged group than the 38.5% of its shareholders will own, the strategic, commercial and funding benefits of combining with Santos made Oil Search shareholders better off. And Paul Hopper's $2.7 billion cancer biotech, Imugene, will move forward with trials for a new treatment for breast cancer patients after the first patient was closed successfully. Imugene is working towards a commercialization of a new treatment called CheckVax, which is designed to selectively kill cancer cells. The company's phase 1 trial gave its first patient the treatment in October, and the 28-day safety window has now passed, meaning that a US regulator will let the Imugene dose be seen by more patients. And then the $1.6 billion construction services group Johns Lying has gone into a trading halt this morning. The company told shareholders to expect a material transaction and a capital raising with an institutional investor and pro rata accelerate non-renounceable entitlement offer. The trading halt is expected to last until next Monday. The company's shares traded at 7.14 and recently hit an all-time high of 7.45. The company floated in 2017 with an issue price of $1. Managing Director Scott Dida still holds a 23.5% stake in the company. Well, that's all for now on the early morning trains, but stay tuned to Kalkine TV because we have many more shows lined up for you today. This is Holly Shield signing off.